Welcome to this Killick Explains video, and welcome to another one in the new format. Hope you're enjoying it. Feedback, as usual, to me at the usual place at the end of this presentation. So, those people who've not been living under a rock will know we have another autumn statement approaching at the end of November. That has been the subject of loads of media speculation. So I just wanted to put a few messages out about what you should and shouldn't be doing in relation to it before we get there. Now, in terms of the date, that's fairly key. Rachel Reeves chopped and changed a little bit, pushed it back. We're now looking at the 26th of November 2025. But in the meantime, don't panic is the key message of this presentation. So what are we expecting? Well, we're hoping we will get some kind of summary of the economic situation, all right, where we are in the macro scheme of things. We'll get an idea of the government's forward spending plans and, most importantly, how they plan to pay for all the things they want to do, whether that's net zero, increased defence budgets, NHS, wage settlements, you name it. Now, the basic choices, and this is worth remembering, if you are the government, right, and you want to basically fund everything that you want to do in the future, your choices are more debt, more borrowing, spending less, well, that doesn't seem to be the favourite option of the current government, cutting costs, or raising taxes. And the one out there on the right seems to be favourite. And why are you needing to do all these things? Well, because don't forget, there is this talk about a black hole. Supposedly, when the government came in, it was 22 billion. That is the existing cumulative gap between what the government gets in income and what it spends. All right, and if that has doubled, as some estimates suggest, okay, then the government needs to do something about it. And the raising tax option, although there are other options, does appear to be favourite. Now, the balancing act that Rachel Reeves has to pull off then is she needs more revenue, but she's got to be super careful that the price we pay for that isn't lower growth. And that's the challenge, all right? Where's she going to get all this extra revenue from through raising taxes, for argument's sake, without hitting growth and without breaking any of the official or implied promises that this government made before and when it took power? Now, I'll just recap what I mean by that. So, in theory, because they said it themselves, she's a bit boxed in. And the reason for that is they made a couple of pledges when they came into power. Now, one of them isn't on this slide. One of them is there will be a big fiscal event. That was supposed to be last autumn statement, and then just tinkering from there on. Well, let's see if that works out the way they think it's going to. And she's kind of said, I don't plan to hit working people, however they define working people. So what I'm not going to do is raise income tax, employees, not employers, there's a catch, employees, national insurance, which is another form of tax, and VAT. Now, it remains to be seen whether she can stick to those pledges, but that doesn't give her a huge amount of room for manoeuvre. That's the point. Now, that hasn't stopped speculation mounting on where she might go next. So, don't panic as you read this, but there are rumours flying around property. Will she hit people with seriously valuable property? A sort of wealth tax, if you like, extra stamp duty, numbers like above £1.5 million mentioned. By the way, the whole concept of a wealth tax, we covered in another video, hasn't been ruled out, and that would apply more widely than property, but that's in another video, as I mentioned. Another one is employers' NI. She's kind of committed not to raise the NI, national insurance, that employees pay from their salary, for example, but that doesn't stop her, in theory, didn't stop her last autumn, from going after NI. Now, where might she go after? Rumours include partnerships. Partnerships traditionally get out of paying, if that's the right way, employers' NI. Maybe she'll go after them in this budget, because don't forget that wouldn't technically break her own guidelines. And then there's the whole gift area. Perhaps what she might do is to say, well, under the potentially exempt transfer rule, which I covered in another video, you can give away as much as you like as long as you survive 7 years after doing it. From an inheritance tax point of view, could she put some kind of cap on the amount you can gift inheritance tax free? I don't know. Pensions, Might she cap the amount you can pull out of a private pension tax-free? I don't know. But these are all the rumours doing the rounds. Now, the question is not, are there lots of rumours flying around? That's always the case. But what should you actually be doing? Okay, and quite important messaging coming up next. Yes, maximise existing known allowances and relief. So put the newspaper down, close the app, think, what can I do now? So have I used my ISA allowance, for example, £20,000 per year, with the junior equivalent of £9,000 available? Have I used my SIP allowances as they currently stand, not as the press speculate they might change? All right. Mitigating known future tax rule changes. Okay, that's not speculation either. We know, for example, that business property relief and agricultural property relief are changing next April. We know that the rules around private pensions and inheritability are changing the April after that. That is known stuff. That can be planned for. We know the capital gains tax rates changed last year. Okay, that's not speculation. Be incredibly careful when it comes to looking ahead and trying to second guess, being a bit clever about what they might do next. So basically, yeah, have the right conversations, all right? Get the family around the table, all right? Discuss inheritance tax planning, that's becoming increasingly important, all right? Get ahead on basic tax efficiency. Think about using ISA allowances, because they are use it or lose it, or we could say use it or see it get changed, all right? So we're not speculating here, we're just saying, be sensible. You can use an ISA allowance any month in the calendar year, so why not get ahead, all right? But don't jump the gun on speculating. So when I talked about property, employers' national insurance, gifts, it would be a mistake, I think, to start actually implementing, I don't know, corporate or trust structures as a solution, only to find out that that wasn't what she was going to target after all, and have to unwind the whole lot and possibly take the tax consequences of making those changes. Now, I've covered an awful lot of ground there. Okay, so other sources of reference include my videos. This is keyluk.com/resources. That's the website, basically. The how-to guides are a pretty good source on the existing tax rules rather than speculation on future tax changes. And of course, our quarterly magazine, Confidant, which as autumn budgets roll through, will of course comment on key aspects of them.